Here's a different way to look at what's happened to the global oil price. It's the number of barrels you can buy with an ounce of gold. Now, in the GFC, it jumped from 8 to 25 because demand for oil collapsed while the price of gold went up. Between 2011 and 2013, the gold price fell by a third, while the oil price stayed at around $100 a barrel. But now you can buy 26 barrels of oil with an ounce of gold because the gold price has stabilised and oil's collapsed again, this time because of supply, not demand. And now base metals have joined in the rout. The London Metals Exchange Index has been pretty stable for almost 4 years, but the first fortnight of 2015 has seen it break down out of the trading range, with copper and aluminium leading the way down. Last night in London it was nickel that fell the most, while oil fell again, and so did iron ore, and gold continued to rise. And so resources stocks were hard hit on the share market today, especially the iron ore miners, Rio Tinto and Fortescue, while Santos attracted some buying after the CEO David Knox emerged from the bunker and said everything will be okay because he's got a pipeline he can sell. Banks also got sold down today, but Telstra forged ahead again. The US market was up in the morning and down in the afternoon, but there were some big gains in Europe last night, except Russia, of course, which has already dropped 7% this year because of the oil crash. And finally, the Australian dollar is down again, so that little sprint that it had on Friday and Monday because the US dollar fell has turned out to be very short-lived indeed. And that's finance.